Hey guys, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil on a pullback kind of day. Now, yesterday, we were falling most of the morning, right? If we look at the chart, we had a little bit of a range to start the day off, but overall, very weak, but still apparent downtrend working its way lower. Except for this guy right there, right? That very last candle of the day was a massive bull candle, and it took back, 2-3 hours worth of bearishness all in one 5-minute bar. So the sellers were obviously in, and it looks like all of the sellers got out at the end of the day, and that caused a nice rally to the upside. Now, that will get a lot of buyers into the market as well, seeing this as potential strength, meaning that they're likely going to open as a gap at the end of the morning, at the end of the day into the next morning tomorrow. And that's exactly what happened. We opened up with a very big gap higher, so the overnight session was very active for the buyers, and that's expected to see the buyers take some profit. We opened with a big gap up after a huge bull burst. We know that buyers are involved in that. They're going to take some money off the table, and that's going to cause a little bit of a downswing. Now, that is going to come in two different scenarios. That allows you to sell that first candle, just looking for a little bit of a pullback. But you have to keep in mind that the buyers are likely going to want to buy this as a pullback to go back higher again. A lot of people will have missed that move up, and they're going to be all kinds of happy to see it pull back even a little bit so they can buy it right back up again. So you don't necessarily want to buy this first one because it might keep going. But when you see it turn back up again, the seller's starting to fail, that's a nice scalp opportunity at the least to try to get the move going. But then we run into a little bit of a problem. We hit that high, we break through it by one tick, and immediately fail right back down again. And that is a huge red flag, bad pun, sorry, for the bulls, for the bears taking over the market. And this was actually the trade of the day, but seeing those buyers fall apart, turning into this huge bear candle coming right back down again, that tells you that the buyers that bought at the end of the day yesterday aren't content with buying here. They want to buy lower. They want cheaper prices, and that's what they're going to wait for. Now, that means that they might buy underneath that low of the day. They might buy at the moving average. Maybe they're looking for a 50% pullback, whatever it happens to be, but they're not interested in buying all the way up here. And that means that you can sell that looking for that drive lower. We come back into testing yesterday's high, and that's all they managed to hit. They hit yesterday's high, huge bearish movement in there, followed it up with nothing but exhaustion, telling us that the buyers were taking over again. They were enjoying this price as nice and cheap, and they're looking for a move right back up again. So that gives you the opportunity to buy right there, knowing that the sellers tried and tried and tried. They got to where they found a price to be of a good value again, and they shoved the market right back up. So a beautiful bounce right off of that prior high of day, turning back higher. And now it's likely that if it does pull back, there may be some buyers that miss that chance right there that are very likely going to buy again if it comes back. So just a beautiful combination of just market psychology along with technical analysis telling us that, the buyers do want to buy, but not here. They want to buy lower. They want cheaper prices, and it came in the form down there at the test of the prior high of day. So that's going to do it for this one. Hopefully you found it useful. Hopefully you found it interesting, and we'll see you next time.